All right, guys, welcome back to the channel. Welcome back to my M1 Finance Dividend Portfolio update and M1 Finance Dividend Portfolio review. Here we are today sitting at $33,415. We are up $7,857. And we are currently up, this is an all-time calculation here, up 39.45% on this M1 Finance dividend portfolio here. Started off with $500 and made gradual contributions up until this point here. And in spite of where we are with the stock market, S&P 500, NASDAQ, Dow Jones, down from the highs of the year, the portfolio is still actually doing quite well in the face of the fact that there's been quite a bit of a stock market correction. Now, obviously, I've got multiple sectors here, and by and large, I would say that the portfolio is doing pretty well. Bonds have held the portfolio down a little bit, and so has telecommunications. But recently, the stock market, and I'm not trying to call a stock market bottom or a complete rebound or anything like that. I'm not a great caller of market directions, but I have been saying over the past few weeks that in spite of all of the negativity, all of the negative news that we've been hearing coming out about many different stocks like Walmart and Target, companies like Spotify and Redfin, and the number of different layoffs that we've been hearing across the board from many different companies. In fact, Spotify was one of the companies recently that laid off over 1,000 employees, and they missed their estimates and issued fairly gloomy guidance going forward. The company also warned that inflation and rising interest rates would weigh on consumer spending for the rest of the year. And again, they missed their earnings and the revenue expectations for the second quarter. This is Spotify. And Spotify was one of the companies that were soaring during the pandemic. Many people were looking for ways to make money from home, to generate passive income, to start their online businesses and, make money from home. And many people looked at Amazon FBA, Spotify, and many other different platforms to, basically take some of that extra time that they had available to them during the lockdown to start businesses and become the entrepreneurs that they've always wanted to become, but lacked the time to do it. So it looks like this shift has changed just a little bit for Shopify. Earnings results came one day after Shopify said that it would lay off 10% of its workforce as the e-commerce activity recalibrated from the pandemic-driven surge. And they laid off about 1,000 employees globally. So that was a lot of people to be laid off. The stock was up 6% as of mid-morning when most tech stocks were actually rallying. Now, I did want to touch a little bit on SCHD. So I do have SCHD. Let's see, let me close out this notification. I've actually got SCHD as one of the ETFs in my portfolio. I really don't have a lot of ETFs in this dividend portfolio, but SCHD, the Schwab US Dividend ETF SCHD, I had to have that as a part of the portfolio. But I've been looking a little bit more at the SCHD top holdings and strongly considering taking some of those top holdings and increasing my positions in SCHD's biggest allocations. So we do have Merck & Company, ticker symbol MRK. We've got PepsiCo, PEP, International Business Machines. How can you forget IBM? You've got Coca-Cola. You've got Amgen, Verizon Telecommunications or Communications, Pfizer, Cisco Systems, Texas Instruments, and Home Depot. By and large, solid companies. Solid companies. Now, of course, none of this is financial advice. Obviously, do your own homework, do your own due diligence. But these are not exciting companies. But what the cool thing is with non-exciting companies, you generally will see far less volatility. Now, I didn't create this passive income portfolio to purchase the Teslas of the world and the super high volatility, very, very popular stocks that are always in the news, the meme stocks. I'm not going to have the AMC stock in my portfolio. I'm not going to add GameStop to my portfolio. Even if they had a very, very attractive dividend, I'm just not into those right now. Not for this portfolio. And not to say never, but I'm just saying for this type of portfolio, the growth of the portfolio through dividend income and passive income, that is the primary objective for this M1 Finance portfolio. And so ultimately the goal behind creating this M1 Finance portfolio is to ultimately eliminate the need for the dependence of a 9-to-5 job. And the way I'm going to do this is by creating multiple streams of income, which is exactly why I titled it Multiple Streams of Income. Each and every one of these companies within this M1 Finance portfolio represents another source of revenue. It represents profit. It represents monthly income or quarterly income through a number of different diversified businesses. ExxonMobil, we've got Chevron here. We've got Energy Transfer LP. So, these companies, and they're paying fairly decent dividends. We're looking at ExxonMobil here, who's paying a 3.8% dividend. And I'm adding stocks that pay dividends into this M1 Finance dividend portfolio that have a long track record of not only consistently paying a dividend, but also increasing the dividend over time. So some of these dividend stocks that are in here, they're not incredibly high dividend payers. However, the dividend growth over time is there. And so sometimes you get into a solid company that doesn't necessarily have the highest dividend being paid, but the rate of the dividend growth is what's very attractive. And so between capital appreciation of the stock and the dividend growth of that's being paid out by the company, sometimes it makes it worth it. So here we have Chevron. This one's paying a 3.75% dividend. So a number of different strong companies are being added to this portfolio to diversify the ultimate income that will be paid out. And every one of these companies, it's almost kind of like I forget, what is it, Kevin O'Leary from Shark Tank. He alluded to during one of the episodes, or probably multiple episodes of Shark Tank, where every time he sends a soldier out and he represents, every one of his dollars as a soldier, his goal is to bring back more soldiers, more casualties. And this is exactly what I'm trying to do here. Every one of these companies it's kind of like a soldier for me. We've got Bank of America here, we've got Aflac, Maine, and these are kind of boring. These are boring, but that's cool. Look at this, 5.8% dividend coming out of Main Street Capital. Not to mention the 96% return that I've received on this particular stock. Now, granted, I only have $100 invested, but the point is that each and every one of these companies represents growth. Each and every one of these dividend-paying companies represents diversification, passive income, and the opportunity to be worth more in the future and to pay more in the future. So I just wanted to give you guys a quick update on that. Now, the stock market is semi-up right now as investors are waiting on a big decision from the Fed. Now, again, a lot of negative news has been coming out in the past month, and I have been saying this. You can go back to my previous videos. I've been saying, hey, so much more negative news has been coming out, but yet we're still not penetrating beyond this, 30,000 mark on the Dow. We touched in the 29,000 territory, but it wasn't. I felt like I still feel like a base is forming here and now. I feel like the worst of the bad news has been coming out. It's already been factored in. The stock market's not continuing to hit new lows each and every single day. And I don't think that the market will be too terribly shocked with Jerome Powell's announcement if he comes out and says that, hey, we're going to increase interest rates by, say, 75 basis points today, which is what is expected. Now, there is a small percentage chance that Jerome Powell may come out and say, hey, we're going to increase interest rates by 100 basis points. That would probably be more of a surprise to the market. But I think 75 basis points is expected. Anywhere in that ballpark, I kind of feel like the market really shouldn't react too wildly to the downside, if anything. U.S. equities climbed Wednesday, boosted by strong gains from Google parent company Alphabet and Microsoft as traders awaited the Federal Reserve's latest interest rate decision. scheduled later today. So, we'll see. Hopefully I'll jump back on later today and give you guys a quick update and market assessment and let you know where the direction that I feel like the market is headed after the Federal Reserve releases their key Fed interest rate decision. So anyway, I hope that you guys enjoyed this video. If you made it this far, drop a like for the video, consider subscribing to the channel, and I will see you guys on the next one.